Hello traders and welcome to another video review. Today is Monday, August 17th, 2026. Let's take a look for a Forex economic calendar for today. So today's data, as you can see, are very poor. Nevertheless, those are the high important data. Both of them were published almost published already. Japanese GDP down from 0.5 to 0.3%, and industrial production in China. This data is scheduled for release at 9 o'clock, and the market participants expect the industrial production in China to drop from 5.3 to 5%. And that's about the current situation on the calendar. Obviously, if you take a look only the high important data releases. Nevertheless, without any further ado, let's switch to the charts, and we start with euro dollar. Euro dollar 4-hour time frame chart is looking bullish. We have a breakout above the last week high at 1.1581, and we are keep moving higher. Right now the local high is and the swing high is 1.1589. So this level here, 1.1559, is now local technical support, and well, we are about to change the color of this one to the new green as well. Momentum bounced very nicely from the sub 50 levels, 44 points right now, almost at the upper channel line, upper range line of the RSI, almost 70 points. As you can see here, what is very important to when you look at this chart is that bar here. This is the pin bar penetrating lower upper channel line, which is blue channel, and upper channel line, which is yellow channel. So very strong support here has been provided, and the market bounced. So this is the current situation, and it looks more and more bullish these days. So the euro dollar bullish. Cable bullish. We are challenging the swing high from the July 15, 1.3557. We already got a marginal breakout, 1.3560. Nevertheless, the price go back to the current range right now. With this strong momentum of 65 points, the outlook becomes bullish. If the previous swing high is violated, then the next target is seen at the level of 1.3656. This is the swing high from May 1st, 2026. US dollar versus the Japanese yen, ABC, up movement to the upside, corrective movement to the upside looks completed. Nevertheless, we still didn't actually broke below 150.60, which is the technical support for the current situation here. So there is still a possible movement to the downside, especially with this falling volume. So if there is no intervention like it was here from the central bank or whatsoever, the situation might be a little bit more, let's say, sideways to bearish. However, any kind of the intervention might smash the US dollar versus the Japanese yen market way lower. But first, 158.60 needs to be violated. The gold market keeps moving higher. We recently tested 4,304 technical support. We bounced really nicely. Momentum dipped to the level of 44 points. Now we are back into the positive territory. Nevertheless, this movement to the upside still doesn't look much impulsive to me. We broke out of the descending channel, the yellowish one, and we established a new swing high, but we need to expand further. We need to expand towards 4,889, where the wave for the wave X is. Now this movement to the upside is definitely not 19.29%, so it's still not a biggest correction to the upside on the gold market. Nevertheless, looks pretty solid. What is worrying is that the movement to the upside has been made on the nice momentum, and the new swing here, right, the series of these swings were made when the momentum was falling. So this situation here looks more like a bearish pressure and no engagement from the bulls, and the result is obviously the lack of the momentum, which is why that situation here might be kind of a tricky. This breakout is not good and strong enough to be a game changer for the gold and the let's say return to the uptrend. It looks dodgy to me for now, so please stay cautious. S&P 500 with new all-time high, 7,816. Let me just move then this level somewhere else. So we are going to plant new swing high here, and that's the situation with the new swing high and the technical resistance. Nevertheless, momentum is still strong, it's positive, and the new movement to the upside is being expected basically. Crude oil stopped a little bit around the level of $82 per barrel with kind of a positive momentum, but not that strong. Obviously, we got this very nice resumption and breakout above the trend line. There is still another gap waiting to be filled. This is the blue rectangle on the chart, and now we are waiting for a spike or maybe for a gap fill on the crude oil. Otherwise, we are going to test the 80.9 level technical support, and then eventually break below 78.44 if there is no bullish engagement. And as expected, the Bitcoin breakout was a fake breakout. We go back to the lows, roughly around 62,500, a local low made at 62,256, and this is the technical support. We just tested this level. The market is now ready to move a little bit higher. Nevertheless, this is still a pure range trading, so that's definitely not a new impulsive wave to the upside in progress. On contrary, we should see further weakness here from the Bitcoin. It looks, maybe someone might say, it looks kind of a solid for a base for another bounce to the upside. Well, maybe, but even if this bounce will happen, it will be most likely short-lived, because from the technical point of view, much more sympathy I got for the test of $58,309 than to the rally to the upside. We should see that every time we have a bounce, there is a counter attack from the bears. Bounce and the pushback, bounce and the pushback, local high, pushback. So there is no such a thing like here when we just drop like over $10,000 and that's it, job done. Nothing like this here. It becomes more and more sideways, and maybe after some time we will see this movement to the downside as a continuation of the previous trend, which is down. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.